Hey everybody, what's up? It's Booksy. Today is Wednesday, May 22nd. I'm going to do a short AMC update. I'm not going to talk too much about GME. I'll mention it a little bit here and there with some price targets and whatnot. So the last few days have been obviously pretty uneventful compared to what happened back on Monday and Tuesday, May 13th and 14th. A lot of sideways action, and today I did an analysis on the stream and did a comparison between what we see here and what we see in the January run-up over here, and I did a pretty thorough breakdown of it. It boils down to just like a failure initially to break out. And so what we had this morning was we saw the action yesterday where we pushed high to about 511 and then retreated back onto that 485. And I've been kind of a broken record all week talking about 485 ever since we came down here. We just have failed to advance multiple times, 1, 2, 3, 4, 5 times. So this had to either be a backup or it was going to be a breakdown. So it could have been an SOS type deal with a backup, or a phase B with a backup. And in either case, you have to then make a move. You can't just sit on it. And then we looked back at the comparison today and talked about how we basically had, if you're going to do a comparison, you have to do it with essentially like a structure around it. We have these downtrend lines and other things. And I was looking at specifically this region as it compared to this initial push, and how at this point we were just kind of backing up along a creek. We had done this cross, so and with extended hours on, you can see that it looks like it broke down, like you would expect of a cat ear, where you kind of come down through here and hook, potentially head to the downside. That would be in the case of this type of a situation. And we've seen this like a number of times, this patterning. And I mentioned right before I left the stream, it's funny, I always manage to somehow leave right before anything interesting happens. But I left the stream and I said, really the big thing is you want this move down, that back up along a creek to continue to advance. You just really, it's not enough just to come back up to the trend. You need to jump over it. And that's actually what we saw at the end of the day today. And not only that, but we closed the day above that problem area, which was that 485. So on the whole, with a 506 close, this was says on TradingView, that's very positive. And it's not just, again, it's not just a push up. It had decent volume. Decent volume push up. It's above the breakdown that happened here. It stayed above the creek all day. It went low, which isn't exactly ideal. And I mentioned to the Discord group last night, and I said it this morning, is like I didn't want it to go below, 560. But once you're here, you're just kind of waiting, 460. But once you're here, you're just waiting to see, is it going to recover? And it did. So it dipped a little bit lower, went back down to previous support around 447, 446, and then pushed up. So effectively creates a bit of a double bottom here. As you can see, it's sort of a second attempt to advance from basically the same level. Overall, I say that's pretty positive. I know a lot of folks were looking at this like a possible head and shoulder. I mentioned that if that's the case, this could potentially be, your neckline right here. There's other ways to draw a head and shoulder in this situation where the neckline may be more tilted. Regardless, you might say, and I'm going to move these for a second, that this would be shoulder one, back up to about this level. And then, of course, this would be shoulder number 2 on the right side. So regardless of how you want to, illustrate it, this is an apparent push against that resistance. For a head and shoulder target, it does need to push and close above that in order to get that target breakout. And I think it's a good enough target that I would say, yeah, you can do some math around that and use this inversion. This is basically your targets divided by about 51% of this number. So you're looking at 45, 46 cents, maybe 47. So, this initial push up, should it push above 511, probably won't be huge. You're really looking at it only going to about 558. When I do a fib retracement here, and again, if it moves up there, when I do a fib retracement, you can see like these numbers. If I get them on the screen here, I'm just going to kind of eyeball it. Yeah, so you're probably seeing this move. Again, maybe it's not like the advancement that you're looking for if it's just from here up, but you know, you're probably seeing an advancement back to this first fib retracement level. Now, I've had some back and forth with folks, and again, I did the analysis this morning in the comparison, and there's one line in particular that's very, very important, and that's this guy right here. And I'm not going to go through that whole analysis again because it would take a long time, and I don't have time for that. Let me make sure I get the right one, though. Hang on before I start squawking about it. So I'm going to use regular trading hours for this. And I'm going to show you what I'm looking at, because that shouldn't be right here. This guy right here. All right, and this particular trend, if you go back to the original example in this markup, it's this red line. And it works its way through here in a very particular manner, and it does the same thing in the local time frame when this setup breaks down. You get an identical kind of hooking action before the breakdown. The reason why this is important is this ultimately defines a great deal of, right there, a great deal of this price action as you move forward. And you can see that in this particular breakdown, a lot of these hits are ultimately like going back to that level, the main two hits on it on this double up thrust. I would say this is a large M cross. Other people are just going to look at it like an S curve. But ultimately, like that's where I might expect it to sort of land in the future. Additionally, the other important place here, you could say, is, hang on, let me adjust this real quick, because I had this on an extended hour, so all this stuff looks like it's way off now. But the other important place would be, the other important line would be these other trends. So these are like parallel trends. You can see that the way in which this sets up on these parallels is really important moving forward, and they're still really important here. So even though I've got this set up for an extended hours view, which makes this look kind of awkward right here, I'm going to go ahead and remove these anyways, because that just was illustrating that cross trend. We broke out of it. It looks good. It's this basic setup, again, with extended trading hours. It was easy to see a few minutes ago if you want to go backwards and look at it. But really what I want to focus on is that marker, which I think is very pivotal, and then ultimately how we might see it play out if it continues to the upside. And I'm still going to use words like if, because at this point in time, we're not quite there yet. We're like working our way through some of this kind of early breakout stuff. We really need to maintain support here. You know, we really don't want to go back down through the creek again. And in the case of like this week, yeah, you could totally have this continually back up, you know, into Friday if you really wanted to, and just have it slowly churn. But you know, at the end of the day, we don't want it to go back down through creeks it's prevailed through at this point in time. That would be not good. So the best case scenario is that we gain traction soon and then head on up, even knowing that max pain is like 450 this week. So these are the trends that I'm talking about with those parallels. So this is just a way of understanding, again, like to some degree, like that price movement that we're seeing across the stock. And you can see that this move also, in addition to running up and jumping over and, you know, possibly generating a new move, a new impulse, in addition to kind of recovering this trend that was lost, right? Not only did it back up and retest the creek here, but then of course it goes up and it actually advances finally. And that's what we see in this move as it jumps and advances and then continues to the upside. And it'd probably be wise to make the comparison as simple as possible and just say, you know, it's roughly this area. The point is that it's in a good place to continue that advancement. These are, again, just parallels that are based on the way that the stock traded coming down. But in the January example, at least in this particular case, there's a couple other places that you would want to mark off. So again, I'm doing this without extended hours on, but you would definitely want to mark off these tops as well. And all of these parallels coming down end up being pretty important intersections. And you can see that as the crow flies along these kind of markers, this isn't exactly super, super steep. But then again, neither was this walk up, that took really like a month or whatever back in 2021. So the expectation might be right now that you're going to see it just kind of explode and just keep going. It could be a lot more docile, a lot more relaxed than that. These are fairly steep. These are fairly not steep. And that's just kind of the way it's set up. Like, that's the way this is structured. There's not really a way to make it look like it doesn't look if you're just going to do a fractal comparison. And I don't think, again, this is necessarily like the only or the best way to do something. I think there's a lot of other methods we've talked about this week. But if we were to gain traction here, yes, my expectation would be that as we move forward, and I'm going to actually mute this one because I think it's a little distracting. As we move forward, the expectation that I would have is that you would continue to advance along these levels. And ultimately, like, I think the retracements are going to be right along where those need to be in those intersections. So you can see that at least initially, it seems like there's a pretty easy to find one at 635. There's an intersection right here. And then later on, we have another one up here about $8. And you can see the retracement for these, if it does go back to the 786, it's right around that peak point where we first dropped off. So that's like 955. So that's, again, a retracement on the move up. That's not assuming any other further moves or anything like that. It's just a straightforward setup. And the way in which this happened back in the original run-up is very similar. We went and did a 786 retrace back to the upside. So ultimately, like, do these match up? Like, are we seeing that that's the 786 level right here at that top intersection? Yeah, it's really similar. I mean, that's where this cross trend meets the 786. You might also notice that there's a Fibonacci time here and time-based Fibonacci mapping, and that also matches up to this region. I'm going to turn on another group. It's going to get really messy for just a second, but what I want to do is just grab that. Maybe I can do it without turning on the whole group. That might be wise. Let's see if I can just grab the fib time. Yeah, and this also matches pretty distinctly some of these cross sections as you move forward. These ones come much, much later. And again, with the extension on, this might look very different. So pay attention. If you're doing something similar to this, you want to make sure you're using after hours versus regular trading hours. You want to just make sure you're paying attention to that. It still intersects, at a reasonable place. So whether or not you map it out this way or this way, a lot of these are developing really strong. You can see here, like, this is a cross on that second one from the 786, which is the exact same place this was. But it wouldn't get there till, sometime in June. And so maybe 2 or 3 weeks out. And that's, again, pretty reasonable given the timing on this. I also did a waveform analysis. That's the thing I was saying I really don't want to get into too much. So basically, we're looking at like this 950 pocket here. We're looking at 7, and then we're looking at more locally like 650. Pretty simple numbers to remember. I did a different setup on, which is kind of strange. Here's your spaghetti for GME. I had to write a note about this because I didn't exactly know what that was supposed to look like or what that might look like. But I found that there was a waveform that you could use with that extension in mind. And again, similarly, it was like next Tuesday, kind of running up to these top areas potentially. It started because I noticed that there was something missing on the RSI. Like, GME very rarely makes this kind of advance without some kind of a backup on the, and so there's a, let me put it this way, okay? So if you go to the 4 hour, you can see that, I'm gonna use regular trading hours. You can see there's a massive gap right here, and I went back and just kind of observed. There are times where this doesn't meet up again with the moving average after making an advancement, but most of the time after making a strong advancement, you can see like here, then there's a breakdown. Even if there's going to be a hook, you almost always see this kind of retrace back up. Right now we're just kind of chilling on it. it just seems like there's a missing move. I went through and looked at some other examples. Again, not going to go through all of that right now, but I felt like there was a missing move. So I started working on this, much like I did with AMC. Now, GME's in a little different position. It didn't make any kind of big advancements aside from this little move here, and ultimately it didn't break over 22.17. So it's still in a place where it has something to prove. Like, it needs to advance above 22.17 and then find support in order to continue upward. At that point, it's got gap targets above. Both those gap targets are like right around the 618 and 786 levels. So it's primed for a decent 786 retracement back to the upside. I understand with GME that the dilution announcement is going to affect a lot of things. And obviously it's not easy to necessarily factor that stuff in. But most people by definition are going to be kind of bearish, expecting this to continue downward. All I'm looking at is kind of ignoring that in motion. I know it's going to be there. It's a possibility, but I'm just kind of watching what I can watch. Again, I know this is really messy. I understand like it's probably hard to read right now because this is like a cluster cuss down here, but I've got a good reason for leaving it on the chart anyways for now. The big thing is this waveform and then potentially forming either a reaccumulation high or a distribution back down low. And that's what kind of started me on this path of trying to figure out timing. And I actually got this bottom timing target right here, these two bottoms, while we were kind of entering into these lower phases. And I think, I think it's a bottoming structure. It doesn't mean it can't go sideways more. I mentioned you might not even really see a move on AMC till Tuesday. This kind of pans out to be after that 4-day weekend. So it would not surprise me to see this kind of advance and then pitter back down to like 5, or even just stay kind of hiked up here between 450 and 5 if there's a pinning action. I think it's a good time to mess with shorts if you're going to do that, but we got to wait and see what happens tomorrow morning. It ain't over till it's over. And I've been saying repeatedly, and maybe to most people's probably annoyed by now, but you don't get a move here until you get over, this marker with significant support. So I'm happy to see it happen. I was not happy to see this move yesterday and then watch us slide down. But it seems like we've shaken out a lot of the sellers here. Its potential for a move is palpable at this point. So we're moving into that potential SOS here. We just got to keep it strong, keep advancing. And yeah, I do expect there could be some chop going into Friday if we're trying to stop the advance. But for now, I really am looking at a decent first move, probably up above 550 just to start and get that going, and then we may see the rest of it next week, or whatever. We're gonna have to wait and see. But that's kind of the big recap. For downside here, I'm not really gonna go into it too crazy. I think it's at this point shown that it's probably reversed, that it's not going to do that breakdown and hook. It always can change. This is obviously yesterday looked like bad because it was like, oh, we are advancing and failing, and we're having to go back down and retest this creek, and it's got weak volume and sellers and blah, 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 blah. It doesn't take much to kind of knock this back down and put it in a precarious situation if suddenly like your buyers, your institutional buyers just let go. They don't take it up and you don't get those shorts covering after you start the advancement here. I mean, you just don't really ever know. So even if I'm confident about a move and I'm in new call positions, I'm in new positions from this bottom, I was hoping and waiting. I was watching and observing and seeing if there was going to be this reactive move. And it looks like another head and shoulder right here, right, on this rise. This one's a little different than the other one. It's like maybe not quite as messy. I don't know. These are harder to measure. I always feel like because they're at an angle, but yeah, it's $1. So it's still like 50 cents on the exit here. So that would imply very similar price target what I talked about before, about 550. So we want to see it advance up here. And again, I wouldn't be surprised if we chopped in this region into the end of the week. But that's all I got for you. I wanted to keep it really short, so I'm a little bit long. But hopefully this helps give you an idea of some price levels. Bearish stuff. Oh yeah, I forgot. really fast. Basically, I just don't want it to come back beneath 45 again. And I know that with 450, you've got that as in mind, but if nothing else, 460. And I think at this point, you're looking at a really good setup unless you get some kind of crazy, up thrust distribution action that just dumps it right back through these levels. So it's not complicated. You just basically would create a new trend and watch out for any kind of dip through here with a hook. I do think, regardless of the upside potential here, there's still a great chance, maybe it's not going to happen now, but there's still a great chance that even if you did kind of make these advancements into June, you might still have to come back down. This could become like a gigantic S-curve back down in order to get to that retest, on the macro creek or something. I'm not there yet. We're not there yet, so we don't need to talk about this video, but for now it looks like it's trying to advance again, and I think that's a positive. So more on this tomorrow. Appreciate you guys, and I'll talk to you later.